Okay, this is April 26th, Thursday, and we're going to look at the daily money-making setups from ProcessTrading.com using the Right Edge trading system on the S&P E-mini day trading with the 1500 tick bar chart. What we see here are the setups. There were 1, 2, 3, 4, 5 long setups and one counter trend trade setup. These were all trend trades here. Now, when we look at the trades, we follow the ProcessTrading.com trend trading techniques of using the PT VWAP. When it's yellow, you can take any trend trade to the upside that's demarcated by the alert timing dots that are below the price bars. And we see them all here. These were the only trades that would have been signified that were appropriate to take, and they all turned out successful. Matter of fact, we'll see at the end of taking all these trades, it would have accumulated 30.5 points for $1,525. So we use these indicators with the VWAP and the timing alert dots, and then we also use the discretionary indicators below, the Intergy, which stands for internal energy, the trend oscillator, or the cinnamon oscillator, and then we have the short-term trend oscillator at the bottom here. We see when we get this timing alert dot on the first trade and we look down at the discretionary indicators that the internal energy was strong to the upside. We see that the sentiment was also strong to the upside as it was sloping up and it had crossed the median line and heading for the upper bound, as well as the short-term trend had turned green and it had risen through and above the yellow pullback line. On the second trade that we could have taken using the trend trading techniques, when we look at the discretionary indicators for the confirmation, we see that price had fallen down. We get a timing alert dot here. The strength was weak to the upside. However, the momentum had gone all the way below the lower bounds, and the short-term trend oscillator had reached the pullback line, and it indeed had pulled back and gone the other way. Now, remember, we actually do not need to confirm the trend trades with the discretionary indicators, but the discretionary indicators should provide some evidence to justify our position. So again, here we have the next trend trade, and we look down and we see again the momentum is coming up through the lower bounds, and that on the energy, though the energy was weak with showing red bars, we had a yellow trending dot show up, and the yellow is to the long side. So we are now expecting that it is at this point that the weakness will start to dissipate and strength will come in, which is exactly what happened, both on the energy, which it came in here, and on the cinnamon oscillator as it crossed up from the lower bound and crossed through the cinnamon oscillator, which itself started to slope to the upside, and the short-term trend turned green and had risen above the pullback line. Our next trend trade here, we see a similar type of evidence where the momentum had went down to the lower bound of the oscillator, but the sentiment was very strong, still to the upside. It was still in the upper half and actually close to the upper bound. So even though the momentum had went down, we see how temporary that is because the sentiment remained strong to the upside. And we also see the short-term trend, which stayed positive, now starts to go above the upper bound and then hug that upper bound as it continues on to the upside. The last of the trend trades is right here, and we could have taken that again because the VWAP is yellow. We had the green indication, which gives us go ahead to take a timing alert dot that is below the price bar. That's right here. We do it with our customary trade management techniques, and we look down and we see that on the sentiment oscillators, the sentiment itself is above the upper bound, very strong, as well the short-term trend is hugging the upper bound. So all the sentiment and the trend, both the short-term and long-term trend, are to the upside. And again, this would, using trade management, another successful trade for 5.5 points. So on this one, you would have made 3.5 points, 4.5 points, 5 points, 5.25 points, and 5.25 points here. And remember, that's all by buying into strength. So when we look at each one of these trades, each and every one of these trades, the technique, trade management tells us that we look at the high of the bar where those timing alert dots showed up, and then we place our order entry 2 points above that high. And so you can see that you did not capture all the possible points available in all of these trades because each one of them required you to take a trade 2 points above, or an order entry 2 points above the high of the bar where the timing alert dot showed up. Now, the one trade that was discretionary and was a counter trend or contrarian trade, then you do have to use the discretionary indicators. And these indicators, we see that the price here had been fairly strong. There had been a lot of energy pushing it to the upside, but then when the gray came in, it became weak. And then a little bit of energy tried to show up again, but it was getting lower as the bars got smaller and then turned red. As well, the momentum had crossed from above the upper bound to below, and it crossed through the sentiment oscillator, another powerful sign that price will continue in the downward direction, or whichever direction that it crossed in. And we see the short-term trend oscillator itself as well crossed from the upper bound, and now it crossed from the lower bound and is starting to slope down. So this was our valid contrarian trade right here, and it was good for 7 points. So if you take all those together, you get about 30 points for 15.25. If you had wanted to just take a point and minimize your risk even more, then you would have had 6 points for a $300 day. So you could see more about this over on processtrading.com, and if you want to hear the next video for the daily money-making setups, subscribe, and I will see you on the next video.